Hello and welcome to everyone. We have a very exciting panel discussion in front of us where our three experts are going to discuss the adoption of stablecoins and the digital euro. Please welcome to Philipp, Karen, and Dante. I'm going to now give the word to Karen. Please go ahead and enjoy the panel discussion. Bye-bye.
Thank you, Victoria. As she said, I'm Karen Ottoni. I'm the Director of Ecosystem at Hyperledger Foundation. I think we have an interesting discussion lined up here for you all. I want to introduce my panelists and have them share a little bit about initially just what you work on, and also how you relate to this topic in particular about stablecoins. So Philipp, if you could introduce yourself to the audience, please.
Yeah, perfect. Thanks very much. My name is Philipp. I'm sitting in Germany right now. We have founded a blockchain center at the Frankfurt School, which is a university in Germany. And we are dealing with blockchain stuff now since 4, 5, 6 years with our, at this point of time, 10 employees. And we have basically demanded the digital euro, what we call it, already 2, 3 years ago. At that point of time, the European Central Bank did not really think about it, but the Chinese did apparently. And therefore, I think we are quite well equipped with knowledge to discuss this. Actually, my basic position is that the European Central Bank is basically tackling this topic. This is good, but they are doing this in a much too slow way. I also think that stablecoins will be the future here and there once regulated properly. And I also see that we are having some issues here in Europe, but I think we will discuss this later on. And I'm very, very, very happy that you and the organizers are putting the stablecoins on the agenda, because some politicians in Europe, they are happy that Libra, or now Diem, has left the continent, and they partly don't really see and know what they have potentially done there in terms of damaging the euro and its potential future in the digital ecosystem.
Thank you, Philipp. I love that you have a lot of strong opinions, and I look forward to hearing more about them. Dante, you almost go, I think, without a need for introduction in terms of how you're involved with stablecoins. But for those who may not be aware of you, I think you are on mute, by the way. Please share a little bit about yourself.
Sure. Thank you, Karen. Well, and it's great to share a virtual stage with you and with Philipp. I hope I'm not declared persona non grata in Europe, having been an enormous fan of the European Blockchain Convention since the very beginning, and it's great to be back. Hopefully next year it's in person. So I am Circle's Chief Strategy Officer and Head of Global Policy. Circle, for those who may know, is the issuer of USDC, or a dollar digital currency. Today, a $40+ billion digital currency that has supported more than $1.4 trillion in cumulative transactions on multiple public blockchains. And so, like Philipp, I too believe that the stablecoin is the greatest proxy we have for what digital currency innovation looks like. And rather than it being an abstraction or an aspiration, the work we're doing here at Circle is very real, empowering all kinds of activity in these markets on both sides of the Atlantic and frankly around the world. So great to be with you.
Thanks so much, Dante. So let's start off a little bit more broad, and then we'll hone in onto what's happening in Europe. We're heading towards the end of the year, and it's always nice to look back on where we started. So we've seen a lot of shifts in the stablecoin arena since the beginning of the year. If we think back to January, it feels like it was 2 years ago. A lot has happened this year, not just in the digital currency area, but in all kinds of, in politics and health and everything. So, but now that we're at the end, maybe you can give us a picture of where we were at the start, how things shifted. There was a lot of talk about this DeFi summer. How did that play out? What was your perspective on the year looking back? And feel free.
So I'm happy to start, and then yeah. Of course I know Philipp has strong experience and views on these issues. Well, there's no question you can't look at 2021 as separate from last year, from 2020, and that if you think of both of them sum up together, it's like we had 2 leap years back to back. And while on the one hand, there was an enormous amount of complexity and obviously economic trouble and a lot of suffering around the world because of the COVID-19 pandemic, on the other, to the extent there's any silver lining in these dark clouds, it's the fact that we've accelerated perhaps a decade worth of technological adoption and digital transformation in the span of maybe 24 months. And then, not surprisingly, all aspects of the crypto economy have blossomed in that same time span. Just to give you a direct experience, USDC closed last year around $4 billion, and today it's over $41 billion. A lot of that growth is a function of the things that we cannot do with value transfer and technology at population scale. And so you're starting to see this mainstream adoption of digital currencies and all of the related economic activities that they support, from the growth of non-fungible tokens, digitally scarce art, the growth of DeFi, the growth of different blockchain protocols that have started to emerge as real challengers, such as Solana, for example, which recently had their major event in Portugal. And so I think across the spectrum, the laggard in this world seems to be the central bank digital currency, right? That the sum of free market activity yet again is proving to be a difference maker, while many wait, and to Philipp's point, are waiting for the public sector to catch up. I'm in the camp of let's not pick technology winners and losers from the public sector, rather enable free market activity that is responsible. And then you see exactly what we've seen in last year and 2021 so far.
Yeah, perfect. Then I'll jump in. I quite much of the same opinion like Dante is. Maybe I think to also bring another perspective here, I think we always have to ask ourselves, where do we use the digital euro for, right? And then there are retail payments, that's something like a credit card. Then we have industrial payment. That's, for example, when automotive companies are acquiring components from automotive suppliers. So that's basically intra-industry payments. Then we have the capital markets, or where settlements of securities take place. That's number 3. And we also have now the crypto domain. And I think we have finally cross-border payments, right? In my mind, these are the typically 5 domains where money is being flowing: retail, industry, capital market, cross-border payments across, for example, individuals, and also the crypto domain. And what we see now is exactly what Dante has said. We see that stable coins have been invented, they work, and they have been one important point for driving the entire crypto ecosystem, such that now you have basically dozens of billions of volume of stable coins day by day. That's trillions per month, right? But those people who are basically disregarding cryptocurrencies, DeFi, and so on, they with it are also disregarding stablecoins. And then they come to the conclusion that stablecoins don't really make sense, and they should not be here, and they are not here because they simply do not see what's happening in the crypto ecosystem, right? And this is applicable to many politicians all over the world who are just not wanting to see the crypto domain, even though you have dozens of billions of turnover here day by day. Then one more word about the ECB. The ECB basically tackles the retail domain within Europe. So that's basically, to speak it very simply, the ECB is tackling the payment method of credit cards, so to say. But credit cards are working already. The iPhone is working, and what the ECB is planning to do might work potentially in 2028. That's 7 or 6 years from now on. Then they will have replaced something which is working already since years and decades. Honestly, that's really crazy. And therefore, I think what we should look to is also the domain of payments in the industry. This is basically where traditional banks could be of a benefit when they are basically tokenizing the euro. Could be stablecoin solution, could be something else. The same is true for the capital market. For cross-border payment, I think stablecoins make sense. For the crypto domain also. And I think now, starting from the crypto domain, now starting to move over to the cross-border domain, I think we see stablecoins rising even more. But we should always see the context, and the context is the question: what kind of payments are being executed here, and then basically it makes sense to discuss it or not. And therefore, stablecoins are there, but only in specific subsegments of the ones I've just explained. Stablecoins, for example, cannot be used yet for settlements on the capital market or for payments within the industry. You know, this is simply not possible for various reasons. But stablecoins are on the rise, but just in a couple of the domains we just have mentioned.
Well, you kind of started to get into that, Philipp. Let's hone in on what's happening in Europe. This is the European Blockchain Convention, after all. So, what do you think about the state of stablecoin projects in Europe in terms of what's already out there and also the use and demand of it? I mean, you just said that there are some things you can't still do. Is that because it's not being offered, or is it because of the infrastructure or regulations around it? And is there demand for that?
Yeah, that's a good question. So to be honest, I don't think there is a systematically relevant stablecoin denoted in euro already here. And I also think that it will not be here, actually, for various reasons. I think the reason is that the US dollar stablecoin is basically solving issues which have been out there. First issue was the volatility in crypto markets. This is where stablecoins added some value. But the value added by stablecoins denoted in US dollar was significant. The value which would have been added by a euro stablecoin is not significant on top of it. Therefore, you don't need a euro stablecoin for the crypto markets. The same is true for cross-border payments, because here you have transactions fees being 5%, maybe 8%, or even more, who knows, across all kinds of legislations, basically cross-border payments. And here, the US dollar already solves the value. And the additional value potentially being solved by a euro-denominated stablecoins is not very significant. That's why we also do not need the euro stablecoin there. So actually, all problems in the area on behalf of investors in DeFi markets and people doing cross-border payments, their problems have been addressed by US dollar stablecoins, and therefore a euro stablecoin actually at this point of time is not adding so much more value. And in addition to this, we have regulation coming up in Europe. That's the Meca Regulation, which will come into force probably in 2023. And according to this regulation, stablecoins should be regulated according to the e-money scheme. And e-money basically is not carrying any interest rates. And since we have negative interest rates in Europe on the back end, it means that the issuer of a euro stablecoin is operating at a loss as of day one. So the day an issuer is issuing a stablecoin denoted in euro, he has or she has or it has to pay negative interest rates on the back end, and there is no possibility to forward these interest rates towards the customer. So it's just not big fun for such an issuer to launch such a business model. And therefore, this is also one reason why euro stablecoins have not really picked up in the market, and why I think they also will not pick up, because there is no good reason for an issuer to do this as long as we have negative interest rates. So there is a multitude of reasons why we did not have an euro stablecoin and why we will not have a euro stablecoin. And in my mind, that's basically not too good news, because on the Eastern.
Hold on. Let's. I want to wait until we get into that part, because I want to hear. I want to talk about Meca in a bit as well. Dante, I'd love to hear any thoughts you have on, from your perspective. Obviously, you work with the U.S. DC. Do you agree with Philipp? Why hasn't there been as much of a demand or use of a digital euro stablecoin in Europe?
Yeah, I mean, I think Philipp's summary is right, that to launch a euro stablecoin under the existing frameworks, or at least the proposed ones, would be a charitable activity, to be generous, and that fundamentally it would reflect sort of a domestic European innovation rather than a cross-border one. So on many levels, something close to $140, $150 billion of stablecoins in circulation reference the US dollar, at varying degrees of quality and levels of sort of prudential soundness, to use big banking terms. But nonetheless, you could argue the dollar is very much the currency of the internet, at least these emerging blockchains as we see it today. But there are really important elements that the Europeans are proposing. Oftentimes, stablecoin issuers and projects tended to negate or neglect the pre-existence of electronic money regulations and requirements. And so I do think there are aspects of what the Europeans are proposing with the markets and crypto assets frameworks that makes sense from a consumer protection point of view, and makes sense from a same risk, same rules, technology neutral approach to regulation. However, if in the spirit of trying to stop big tech from innovating at the margins of how money moves onto the internet, you end up creating such a heavy-handed regulatory regime that you kill entrepreneurialism. I also think then the balance has to shift a little bit more towards enabling responsible innovation in the European context, while at the same time acknowledging that on many dimensions, the European sort of payments and money movement landscape already has a number of policy advantages. Open banking, fast payment systems, and so on. And so it perhaps, just to Philipp's point, the advent of a euro stablecoin may be less to do with domestic needs in Europe, but rather putting the euro onto public blockchain markets, cross-border payments, remittances, and so on. The people in Europe from diaspora populations certainly would welcome a digital euro as a means of sending remittances to their home countries and so on. So I think the void can be filled, and it will likely be filled by private actors. But at the current rate, it's not an environment favorable to entrepreneurs.
Mm-hmm, mm-hmm. Since we dipped into the regulations here, let's just give some context for the audience. So we've mentioned Meca, the markets and crypto assets regulation, that's the regulation in Europe. Could you provide a little bit of context, how does it compare to some of the other regulations you're seeing? Dante, I know you're in Congress all this week and speaking with Congress. And so, what is it, more extensive, more strict, or how does it compare to what we're seeing elsewhere?
Yeah, so I've long said in the early days when the markets and crypto assets framework was originally just a sketch, that if passed, it would be to crypto what GDPR was to privacy. And so on the one hand, I completely applaud the European approach to having depth of thought in terms of the broad classification and categorization of the crypto markets in Europe. And I think my only message and my only sort of admonishment would be careful not to overreach, right? In barring the gates of big tech competition in payments, be careful not to have such a line extension that you end up killing entrepreneurialism, which is the very thing the Europeans want to get moving. On the other hand, it is a pretty broad framework, and many jurisdictions around the world, in the absence of large economy crypto asset frameworks, are beginning to think of MiCA as an anchor. And so you're seeing other jurisdictions starting to reference the markets and crypto assets frameworks. Here in the United States, I think, broadly speaking, we have quite a lot of upcoming policy and regulatory recommendations. But in some ways, you could argue, I won't make judgments, but you could argue that the model at least is favoring free market innovation. Companies like Circle live under a regulatory regime similar to a PayPal or major payments companies, which would be the equivalent of e-money in Europe. So I think there's hopefully transatlantic alignment, if nothing else, on how these innovations continue to thrive, because the competition is geopolitical and geoeconomic, as I'm sure Philipp was about to mention, in moving east from Europe.
Mm-hmm. Mm-hmm. What do you all think, though, about the fact that maybe it would be helpful to have more guidance and more regulation to allow companies to get licenses in different countries in Europe, or to help them operate more? Like, if maybe the U.S. has taken a more hands-off approach, do you think that's affected how things have developed in Europe to have more guidance for that?
Should I answer, or should Dante answer?
Go ahead.
Okay, so perfect. Yeah, it's a good question, actually. So I think you can see very nicely that the US is basically not really taking a perfect hands-off approach. Look at Tether, right? Tether is out there for quite a while, and they have always been under regulatory scrutiny, but still they have not entirely been prohibited, right? So they are still there, right? But they have been scrutinized multiply. But still, there is no regulation out there which would prevent companies from doing this. Therefore, you have also USDC, and you have also a couple of other stable coins out there in the US dollar markets, because it's not prohibited. In Europe, once you now read the Meca scheme under which stable coins would be regulated, then you come inevitably to the conclusion that it doesn't make sense to issue a euro stable coin because of the negative interest rates and other things. And taking all this together, you are basically hindering innovation. And that's why I say we will not have a euro stable coin here unless we will have changing the law. And still, I would have to agree to Dante, inevitably, the Meca is still a good regulatory scheme because at least it provides some clarity in other forms of crypto assets, the utility tokens, DeFi stuff, and so on. This is all good, but in my mind, one of the major flaws of the Meca is basically the e-money tokens or the stable coins. And maybe one point I would like to add. In Europe, in case we talk about the digital euro, for whatever reason, we are not very often talking about stable coins, but rather we are thinking about how to empower the industry and the capital market with a digital euro. This is not necessarily related to stable coins. You could also create a digital euro with other means, right? And one solution for this is the so-called trigger solution, where you basically leave the euro where it is in the legacy bank account, in the IBAN account, and then you are integrating the legacy IBAN account, the legacy bank account, with the blockchain network, with an interface. And thereby you get some kind of simulation of the digital euro on chain. Yeah. So the euro is not on chain as a token, but you get some kind of simulated digital euro. Doesn't sound perfect from a technical perspective, but it's still sufficient for the demands of the capital market and of the industry for the next 2-3 years, right? So we do have some solutions here, at least for the industrial segment and for the capital market segment, but we do not have a solution for the stable coins.
So what are the implications of all that? You both shared your views on sort of the state of an adoption of stable coins in Europe and how basically the US dollar stable coins became a default. So what are the implications of that, looking at what is going on in China? I know, Philipp, you wanted to kind of bring that in earlier. How does this affect what is available to users in Europe, but also just the geopolitical situation with that?
Difficult to say. Maybe a quick word. On the eastern side, we have China, where China is creating a government-driven digital Chinese version, right? They are doing experiments with 104 million of people who are basically allowed to transact in the digital Chinese version of their cash, right? This is more people than we have in Germany. That's massive experiments, right? And on the western side, we have the US, where the Fed and the government is not having a government solution right to be launched like in China. But in the US, you still have the stable coins, which also represent some kind of the digital dollar once they are regulated, maybe even more in a better way, right? So in Europe, we might have a void here. There might be a gap. And the question is, what is the implications of this? I think for the industry and for the capital market, the implications are not too severe because there are solutions for the digital euro made for them. But especially for cross-border payments, for international payments, and so on, I would expect that the euro is simply taking a lesser important role in the future. We already see this now in the newspapers, right? In case the Bitcoin price is quoted, very often in German newspapers, you see the price being quoted in US dollar, right? This is crazy because it's not our home currency, but you see here, there is some mind share being opened up for the US dollar, especially in cross-border context or in international contexts, such as the crypto world. This is something I think will develop to a larger degree in the next years, and vice versa. The euro then might play a smaller role in cross-border contexts where the US dollar stablecoins might provide sufficiently good solutions, payments between South America and Japan, forth and back in all kinds of directions and networks.
Yeah. Dante, this is a topic that's been going on since probably the start of the invention of stable coins. Is, are stable coins going to topple the dollar? Are they going to threaten it as a major world currency? And we've seen the development of central bank digital currencies. Many central banks are researching this. Some have gone live with this. Not accelerating, as you both said, as quickly as the stablecoin industry as of yet. But what is your view on that topic? Could it be that the opposite actually happens? You yourself have said, how much Circle has grown in just the last year. Could it actually be helping the US dollar?
Yeah, well, it's a lot of fascinating topics we could dive into. I mean, on the one hand, how much consumer protection can a government ask for such that it keeps hundreds of millions of people and billions of people around the world locked out of the financial system because they cannot take risk? So I think that's very bad. And I think it also runs counter to the spirit in Europe of trying to spur entrepreneurialism and financial services innovation. It cannot be done if the only solution is the government effectively picking technology winners and losers. And so the analogy of what is happening at the geopolitical level with money and central bank digital currencies and stablecoins is often compared to a digital currency space race. But imagine how useful the skies would be if aviation safety authorities also built jet engines and flew planes. We would have very few options. They would be very expensive. They would likely be very slow. And personally, I think the safety record might be a little checkered. So free market competition is an important criteria here. And I should point out that the same holds true with how money moves. The sum of private sector activity has enabled global payments networks like ACH and SWIFT and Visa and MasterCard, travelers' checks. All of these innovations tend to be built in the private sector inside free markets and according to first principles and regulations, and then later they start to scale. That's what's extended the role of the dollar all over the world, and now through stablecoins like USDC, extending the role of the dollar on the internet.
Mm-hmm. We have something that's come in from one of the questions from the audience. How will these fiat-backed stablecoins work with or compare with CBDCs that get launched?
I mean, quickly, and I know Philipp will have something to say about this. I think personally, it's the greatest proxy. You know the expression, imitation is the sincerest form of flattery. After all, a stablecoin is in fact the imitation, if you will, of its underlying reference asset. The other point I would make is that 95% or more of all value-added money in circulation around the world is in fact privately issued, whether it comes from fractional reserve banking or whether it's captured on a plastic card like a credit or debit card. Most of the money that we consider value added is privately issued. Doing the same with a tokenized blockchain-based asset, I think is just a reflection of that same paradigm of innovation.
Okay, we only have 1 more minute. So real quickly, just 2 last points I'd love for you both to make. One is, what do you think we can expect to see in this first quarter coming in 2022 with the adoption of stablecoins or proliferation of them? And then what's something that you would recommend our audience read or listen to over their holiday breaks to learn more about this topic?
Yeah, I give it a try. So what will happen in Q1 next year? So I think people will discover more and more how important stablecoins will be. US people will also discover that they have missed out on a government-initiated solution like in China. And at the same time, they will discover that stablecoins might be their solution once regulatory efforts are changing a little bit to really basically get the stablecoins all under control from a regulatory perspective. And then they have a very, very good worldwide international efficient solution for a digital dollar, right? So this is something I would expect for next year, maybe also Q2, Q3 to be discovered, by politicians once they discover that all this, what we are discussing here, has a geopolitical importance. And how to read, difficult. I think the best tactic is basically to create a Google alert, and you type in digital euro, and you make a Google alert on this term, and then you simply read on a daily level very briefly what's happening in the world to get an overview. But it's difficult, it's developing so dynamically.
It is. Dante?
I see we're at time, so I'll be super brief like a Swiss clock. All I would say is if 2020 was the year this came out of beta and 2021 was the year the stablecoin went mainstream, then 2022 is the year the technology fades into the background. When we stop talking about blockchains, we could change the world with it. When was the last conference you attended that discussed the hardware and software of the internet? So I think the movement of money and the internet of value is on the cusp of the same transition.
Mm-hmm. And what do you recommend as a reading?
Well, I would say read everything that Philipp and his wonderful institution publishes, and then listen to all the panels of this wonderful conference that you could not attend yourself.
That's wonderful. Thank you so much, Philipp and Dante. It's hard to fit such a big topic with so much going on in just half an hour, but you did a great job of really giving us a broad perspective, but also really understanding what's going on in Europe. So thank you so much. And thank you, Victoria and the European Blockchain Convention for having us.
Thank you, Karen.
Thanks to the three of you. Amazing panel discussion. And yeah, and I think an easy one is, as Philipp said, have some Google alerts on digital euro and other relevant topics, and you'll become experts quickly. Thank you, guys. See you in the next conversation. You go to the schedule tab and see you there. Thank you. Thank you, Philipp. Thank you, Karen. Thank you.
Thanks, Victoria. Bye.